Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. Another chart on which I've chosen to look at the monthly chart for definition, as the daily chart just doesn't cut it. So we'll start with how the market got here. For this, we'll have to look back at the 2010 to date uptrend, currently at 176.5, and the broken but hugely important 2007 to date downtrend, currently at 242.75. These two together formed a huge 2007 to 2021 sideways triangle. This had an initial target X in the 360.5 area, which is coincidental with the mid 2021 to date bullish halfway hesitation target, and two secondary targets, depending from whence you measure, of target X2 in the 423 even area and target X1 in the 405 even area. I could also describe the targets for the 2012 to 2021 rounded bottom, but they are so far below the market as to be superfluous. So what happens now? Well, prices have pulled back from their excessive highs below the 50% Fibonacci line for 2022 at 341.25, which is now resistance. But prices are now starting to hit some combined Fibonacci supports in a 319.5 area to 321.75 area. However, the next important level on the downside will likely be the 2007 high at 300 even. Then the 50% Fibonacci on the 2016 to date move at 287.25. However, I have a suspicion at the moment that the 2022 lows at 259.25 and 258.5 are key to any part of this market maintaining the current bullish incentive. This brings me to my final point. We are far away from completing this month, but where we are right now leaves the month of March looking like a huge, indecisive, spinning top, right at the top of the market. If that is to be the case, then it would not be surprising to see April be a significant bearish pattern. Right now, what is needed to maintain a bullish incentive is a move up over the 50% Fibonacci line at 341.25. Failure to do so and also hold on to the nearby uptrend at 329.75 may see prices drop back within the huge sideways triangle, and also test the early 2021 highs between 232.75 and 236 even. London UK feed wheat. Once again, I find it easier to use the monthly chart here than the daily chart in my weekly commentary. Well, this market is different by a long way from the US wheat markets and even Paris milling wheat. There are three key patterns to consider here. One completed, one under attack, and one in operation. The most immediate and the one that has been completed is the 2019 to date bullish halfway hesitation. This had a conservative target X in the 245.5 area and a more liberal target X1 in the 264 even area. The difference between the two was that the conservative target fully utilized the July 2021 low at 164 even as a measuring point, whereas the more liberal target utilized the optimized lows last year in the 181.5 area as a measuring point. Both were easily achieved. Target X last month and this month target X1, with a strong gapping move higher. The next key pattern is the 2016 to 2019 bullish Andrews pitchfork. Since 2019, the market has done a reasonable job of utilizing this pitchfork as the bullish angle of attack. Admittedly, there was a breach of the lower time, currently at 182.20, but it was a monthly bull hammer pattern in July 2021, and there were no closes below it. Meanwhile, the middle time, currently at 227.80, has done a pretty good job, initially as rolling higher resistance, and more recently as a hesitation area. Well, this pattern is under attack, as the market this month has gapped higher and pushed up through the upper time, currently at 273 even, by some considerable distance. If prices close over the upper time this month, then this pattern would be breached, having two or more consecutive closes over it would break this pattern. So, this is one to watch. However, finally we have another pattern, another new pattern developing here. It is to regard the whole of 2005/2007 to date action as a possible huge expanding wedge pattern. The upper trend line currently at 297 even, and the lower trend line currently at 119.70 look viable, though one could look at the 2008 to date uptrend currently at 108.40. Looks like it might be a shallower alternative to the older, more acute uptrend. That pattern is still in operation, and that is what the state of this market looks like. I'll be most interested to see how this market closes out for the month. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.